Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. A stellar rally all around, but we have come up from the opening highs. That's of course an important note. We are still awaiting a granular detail of the tariff cut that has come by, but for now, markets are cheering that on.
Good afternoon, Sonal. Absolutely. Most of the exporters locked in the upper circuit. Most of the stock seeing a lot of positive momentum leading to a very strong advanced decline ratio. A lot lined up on the show. Some important corporate conversations. So let's start off with the top headlines. The India-US trade deal sparks the mother of all stock market rallies in India, with the benchmark Nifty opening 1,200 points higher before some profit-taking trims gains. The advanced decline ratio is sharply skewed towards advances.
PB Fintech's board will meet on February 5 to approve a QIP for funding and acquisition. Meanwhile, Aditya Birla Capital Housing Finance arm mops up 2,750 crore rupees from Advent as growth capital for a 14.3% stake. Both deals were earlier reported by CNBC-TV18.
Textile stocks are now flying high. Gokaldas, KPR Mills, Wellspun Living all surge as India, with an 18% tariff, is now placed better versus exporters like Bangladesh and Vietnam.
The reduced 18% levy is expected to help auto ancillaries sustain global order inflows and margins. Bharat Forge's Bhaba Kalyani tells CNBC-TV18 that demand could rise 25% in the next quarter. Okay, all right. Those are the top headlines that we are tracking. Of course, the biggest news being what's happening with India-US trade deal. Finally, there's some clarity. Markets were in the wait-and-watch mode for the longest time. Rupee was also depreciating on the back of no clarity there, and that has come in as a big positive across the board. And the commentary from managements and sector specialists and market guests also have been quite positive on this move. Of course, we're still waiting for granular details as to what all comes under this, what is exempted. So these are some details we'll keep getting for you. But let's do one thing. Let's get to the first management on the show. Vishal Thakkar, Deputy CFO of Anupam Rasayan, is joining in now. Vishal, good afternoon. Thank you so much for joining in. The overall chemicals industry has a 20% exposure to the US as a market. How is it for Anupam Rasayan in terms of numbers, and how does it change things for you? You also made a major acquisition in the US recently. If you can explain how things change now from 50% to 18% now.
So, Sonal, first, thank you for getting us on your channel. And yes, I think it's a fantastic time for India and chemical manufacturing industry, and especially for somebody like us. If you look at it, India exports over 20% to US and another 17% to Europe. So overall, 40% of India's exports is having a favorable outcome over the last 1 week. Even if you look at from a budget point of view, we have had a very good budget from setting up domestic infrastructure for manufacturing, including 3 chemical parks. So that really helps out. And if I speak specifically for Anupam, yes, this acquisition could not have been better timed. I would just say that it's a fantastic opportunity for us to offer a broader basket of portfolio of products across various end markets, be it the polymers, pharma, agro. In pharma, KSM especially, where US is having a very high focus, semiconductors. Also in terms of the larger valuation that we will be able to offer to our customers, I think this is one of the very buoyant and very interesting 1 week that we have seen across Europe deal, budget, or the US now announcement from the US government. So I think we could not have expected anything better than this.
Vishal, give us particular numbers. You said the overall industry, these are the exports, 20% to US, 17% to European Union. How much it is specifically to Anupam Rasayan? And on the acquisition side as well, you say that you will get better markets, but having a facility there already wouldn't have impacted you anyway, right? 15% tariffs or 18% tariffs. Or it did get impacted because you would have to get some products from India for production. I'm just trying to understand how is it different for you now?
Sonal, if you look at any of these kind of industries that we are, we're an industry where anybody is looking at a supply chain solution. They are looking at a relationship of over a decade and otherwise, and they look at larger trends, larger connections that you have. So yes, the manufacturing from Jayhawk would not have mattered in terms of the tariffs. But if you look at a combination, when I go to a customer and say I can offer you a supply chain over India and US, your ability to attract that business anyways is higher, and then with this kind of an event really helps us even further to offer that. So that's what I'm trying to say. Even if you look at from a alternate
Just
supply chain
quick
sourcing
clarification we'd like from your end. What we want to understand is, before today, what was the total tariff that was applicable for you? And before both of the deals, what was the tariff you're paying to EU? What was the tariff you're paying to US? Post this deal, we understand it will drop down to 18%. So we want to understand whether there is a material difference.
Okay, so let's talk about Europe. Europe was anything between 6 to 13% that we used to pay. My
Okay.
customers used to pay effectively,
Okay.
and today it will be zero.
Right.
From the US point of view, there were few products which were exempted, but there were few where we were paying a higher duty,
Okay.
and that will now come to 18% as we understand. Yes,
So
fine,
how
things
much?
are yet to be seen, but a priori understanding that we have from the announcements is this range. So yes, there will be a delta for us as Anupam. There will be a better one thing that we have to also understand, the people like us who are into CSM, CDMO play, the contracts that we get is over 5, 7, 10 years relation period. Now there, the visibility of the tariffs, visibility of the supply chain is far more important along with the rates. So to that extent, it will matter to us. It will matter significantly to us.
Okay, all right. We take that point. Vishal, thank you so much for joining in today. Market's in a different mood, so we have to address that as well. But a pleasure speaking with you. Thank you for explaining the impact of both the EU FTA and the US trade deal as well. We'll slip into a short break. When we come back, we'll connect with the management of Intellect Design Arena to decode their Q3 numbers. Stay tuned for that.
Welcome back to Midcap Radar. Well, one particular company that saw a muted quarter in Q3 was Intellect Design Arena, a name from the midcap IT space. We can welcome Arun Jain, Chairman and MD of Intellect Design Arena. Well, thank you so much, Mr. Jain, for joining us. The first question which we want to ask you, and which has led to quite a bit of a sell-off as far as the stock is concerned, has been the muted margin performance both on a year-on-year as well as on a sequential basis. Analysts on the street were anticipating a steady-state run rate of over 20%, but this time around it's been quite muted. What is the reason for that, and when can we expect a recovery?
Yeah, so thank you very much for inviting me to this call. And on an ongoing basis, we are saying we are a business which should be tracked on LTM basis, last 12-month basis, not quarter on quarter, because single license revenue could be as high as 50 crore to 100 crore difference can create a margin difference. So margin trajectory should be looked at it from the annualized basis. We have last 12 months, we crossed 3,000 crore, very significant mark in Indian IT industry. A product company is crossing 3,000 crore revenue in last 12-month period. Our revenue grew 23% on LTM basis. My margin grew 33% on LTM basis. My cash position moved 49% year-to-year basis, point to point. Now, this is a phenomenal quarter from our internal perspective. Quarterly number, we cannot manage, and we don't want to manage, because the deal sizes are big, contracts are complex, and they cannot be tracked on 90-day period.
Got it. So, Mr. Jain, since we are not talking about quarterly numbers, on a FY26 basis and FY27 basis now, if you have some visibility, what kind of margins are you looking at? Will they, on a consolidated basis, see the 20% mark? And in terms of growth as well, what kind of deal wins and growth are you looking at?
Yeah, so if I look at it, our three businesses which you started, GTB business now is a 1,400 crore business. GCB business, consumer banking business, we started in 2018. That is close to 1,000 crore, 960 crore. The AI business we started in 2021 with the wealth and insurance included is close to 500 crore business. So these three businesses are healthy businesses. Our geography distribution is Americas, which is giving 25% of revenue, will be close to 1,000 crore. With the new deal signing it up, it will further accelerate. Americas, Europe is another 25% of revenue comes from there. And the rest of 50% comes from Middle East and Africa itself gives the 600 crore revenue, and then India and APAC. So I think this is a second lever which is there. Third is the tech edge on eMAG.ai. Fourth, opportunities are what you asked the question is what opportunities are there for next year. There's a huge shift in moving from mainframe to cloud business. So big opportunities are coming because MIPS rating in mainframe is 5 times more expensive than cloud migration. So that's the other area where the big opportunities are coming us our way. These deals are big in size. So these deals can run into double-digit millions of dollar deals. So that's why it takes time to close those deals. AI, it's a big driver for us to look at it. So from all the 4 angles, opportunity angle, tech edge angle, geography angle, product edge angle, we have distributed our multiple.
Mr. Jain, we understand the business opportunity and we appreciate that. So, can you distill it down and can you quantify it? So, FY27, what is the kind of growth you will end the year with, even if you track it on an LTM basis? And FY27, what kind of growth are you seeing? And can we expect margins to recover back to, double-digit or even 20% levels that earlier you used to enjoy?
That's right. So, you want to push on the right number. I'm saying we designed the business for 20% growth year on year.
Okay.
The business design we are talking about. And margins are also about 20%. Now we are in investment phase. We moved to 25% and come back to 21%. So these are the 2 bandwidth range we designed the business.
Take that point. Mr. Jain, we have a lot more questions, but you would appreciate we are speaking to you on a day when markets are soaring higher on the back of US-India trade deals. So we'll keep this conversation some other day. Thank you so much for joining us and patiently answering those questions. We'll slip into a short break now. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back. You're still tuned in to Midcap Radar. Well, in a market where most of the sectors are in the green and other stocks, couple of outliers. PB Fintech, we've spoken about the stock earlier as well. It is at the day's low as we speak, down 6% after the cuts that the stock saw yesterday as well. Some fundraising plans, some acquisition plans as well, but the street seems to take it the other way. We do have Misho as well, which is down around 4%. Varun Beverages, after the numbers, that stock is also on our radar. It's down around 3.5%. But rupee is set for the biggest single day gain versus the dollar, and it is up around 1.3 rupees against the dollar. So that is another big story that we are tracking very closely, the rupee move after the big depreciation that we saw in the last couple of months. With that, we'll do one thing, take your leave on this edition of Midcap Radar. Stay tuned, your stocks when we return.